Hit it.
It's Friday, January 9th, 2026, episode 282. I'm Patrick Serezna.
And I'm Kevin Muir. We have the great pleasure to welcome back to the show Mateen Chaudhry, author of the Discuss the Tape financial newsletter. He updates us on his resource call, but then explains why he thinks China and Japan offer some of the best opportunities in 2026. And stick around for his outside-the-box market surprise that you don't want to miss. Then Patrick is back with a special New Year installment of Talking Charts, where he takes the crayons out of his mouth and tells us what he sees in the charts.
And folks, stick around. We might drink some beers along the way. Actually, Danny, hop on. I'm the only rock star drinking beer today on the show. What beer am I drinking here?
Well, this one is called Tales from the Patch Pumpkin Porter. And apparently, this is a cornucopia of spices with sweet flesh along with creamy milk sugar went into this chocolate-hued porter. Sounds disgusting.
Okay, so it sounds disgusting. I'm expecting it to be, but you know what? It's been sitting in my fridge to be featured on the show, and it's like I got to put this thing back, and I can't wait a year to do it. So like this is my sacrificial time to drink this thing. But what's the cool thing about it is it says the can glow in the dark. I think I'm going to put it under my shirt here just to see. It says the can glows in the dark, so it'll be. I'm gonna have to check
Pat, it out. You're gonna have to turn the lights off, but we need to see this in the after show.
Well, I don't even know if it's true. It just says it. I don't even. We'll have to figure it out. Anyway, let me try this out. Not good, but it's not as bad as I thought it would be. Okay, so let's go from there. Kev, give us a disclaimer, buddy.
Nothing in this podcast should be viewed as investment advice. Listeners should consult an investment professional before making any decisions regarding topics mentioned in this show. Side effects of too much huddle may include the Venezuela supply shock syndrome, the judicial tariff whiplash, and the all-time high amnesia.
Oh, that's absolutely. All right, let's get to the guest.
It's our great pleasure to welcome back to the show Mateen Chaudhry. He's the author of Discuss the Tape financial newsletter. Mateen, thanks for getting up early in Australia for us.
It's 8:11 in the morning, so yeah, it's pretty early, on a Saturday. But thank you very much for inviting me back.
Well, it's great to have you. And so for those who want to know more about Mateen, I encourage you to go back about a year ago. He was on the show and he had a lot of great ideas. Why don't you tell us a little bit like how some of those played out, what you've been thinking since then?
Well, we were positive on resources. I think post the meeting with you, I think we got more positive about the cycle. Obviously, I live in Australia and I can see what's happening with the capital markets down here. And generally, we feel that we're in the early stages of the cycle of a resource boom. And I think the news yesterday that Rio and Glencore might be considering a merger is another reason why we should be positive, because those sort of things happen at the start of the cycle, not the end. But in Australia, what we've seen over the last few years, since I got here in 2017, no real investment in exploration. Maybe that's the same in Canada. And, we saw liquidations, companies going bankrupt. And I think that usually is the bottom. And now we're starting to see those stocks perform. And generally, I think it's going to be a good environment for being an Australian stockbroker over the next few years. So quite positive,
Yeah. So by the way, you mentioned Glencore and Rio, and someone told me once, and I don't know if this is true, but there are more billionaires on the trading desk of Glencore than any other firm in the world.
I believe it. I've met some people who work at some of these firms. They're incredibly smart, and obviously they get great information. It doesn't surprise me at all.
Yeah, no, they do seem. I've only had the privilege of meeting a few, and they do seem like some of the sharpest and actually nicest people around. So, Glencore, if you want to take me on, let us know if there's more billionaires on your desk than anyone else, and I'd love to meet some of them.
And they're also in tax efficient areas, so as
that's
Canadian,
right. Well,
you probably can pay less tax.
That's right. I'll have to go skiing with them in Switzerland.
Yeah.
So your bigger picture is, you're positive on resources. This is the result of some under, capitalization of exploration. You're already seeing it. Can you talk a little bit about what you're experiencing there in Australia, how it's going about? Like I was telling someone the other day that the Canadian Vancouver exchange has been one of the worst performing exchanges around, and it's just been absolutely dead. And we finally, sprung up to life. And as you rightfully point out, I think this is just getting started. Do you feel the same? And what sort of attitude and kind of color can you share with us on the boots on the ground in Australia?
Yeah, I think first thing to say is some of the Australian stockbrokers that I come across who operate in the small end of town, the explorers, they're very sophisticated. They know their stuff. The issue has been the market. It's just been terrible. So it's really been an uphill struggle to sell these stocks, these deals. But now I think you're starting to see foreign investment down here in some of the smaller names, and they're doing blocks, and there's a lot of capital markets activity, which is obviously great news for the stockbrokers I speak to. But in general, I think there's a realization that commodities are cheap, probably versus equities. I think you can make that case. China it's a slow recovery, but it's getting slightly better, and that's a key driver. And that there's just been this massive structural underinvestment, which is the same in Canada.
Right.
And so therefore, some of these share prices are too low. And obviously, we've had the benefit of the gold price moving, which has definitely been a positive. But I feel like this will continue, especially because take copper, there's not enough copper mines. It's tricky. Some of the Aussie companies down here are very good potential assets in South America. I think there's going to be a big focus just because AI is driving the need for some of these materials, and technology requires this now. So I think there's a long way to go. Does that make sense?
Yeah, completely. And you mentioned China and the fact that it's getting better. Do you think that they're the main driver of this resource boom? And what do you see going forward? And just talk to me a little bit about what you're seeing in terms of your experience of Chinese investments.
Yeah, so I'm not entirely sure it's driven like it was by China in 2004, 5, 6. I think there's actually more of a tech angle here. Some of these resources need to, like rare earths.
Right.
Did we even know about rare earths in 2005? I didn't. And now they're everywhere and everyone's talking about them. So I think there's a slightly different angle, but obviously, and the construction boom of China in the early 2000s isn't really driving this time. They've got a glut of property. So it's much more nuanced, I think, with the recovery now, and more geopolitical, because strategically some of these assets are going to become more and more important, including copper assets, right? So I think what you'll see is American companies maybe come down and acquire things down here, or related companies, which wasn't really the dynamic back in 2005, 6. It was more China's recovering or growing, and therefore they needed a lot of resources. Does that make sense?
Yeah.
But in terms of, yeah, so go ahead.
Well, it's going to just say you mentioned the geopolitical aspect, and I tend to agree with you. Like I would say that the world has never felt as precariously perched as it does now, and there's no doubt that trade as a whole we've become less globalized, or at least the direction of globalization has headed the other way. And I've heard from commodity brokers that there's been a lot of stockpiling by China in terms of this last little bit. Do you think that that's going to, part of what's driving the resource boom is the fact that all these countries feel the need to have their own, stockpiles, because they can no longer count on, Australia always being there, or Canada always being there, or the US always being there? The trade has become more difficult.
Absolutely. And I think, we saw that with rare earths early on. I mean, China has the stranglehold on the supply. And look how that's changed their bargaining position with the US. It was evident at the Busan meeting in October the 30th or October 25th, I can't remember. But, all of a sudden China, and I said this in the newsletter, has been able to push back on the tariffs that President Trump wanted to push through. And they got some concessions. And I think that's the first time in maybe 150 years that the US has been in this situation. Like, we can talk about the Soviet Union. The US was always in a strong situation with the Soviet Union. It was always in a strong situation with Europe. Japan, it's always reasonably, like, Japan effectively was a vassal state for a long, long time. Now, because China owns the resources, those particular resources, it means that they have bargaining chips, right? So it has become very important to figure out what to do with these materials or these commodities that are so important for the future. And copper is one of those. And I would imagine that some of the decisions made by the Trump administration, we will see, will suggest that getting more rare earths will be a big focus going forward. And so I can see this actually getting, growing as a theme, really. And the recent invasion of Venezuela, who knows what that really is all about? I'm too dumb to know. But there are a lot of materials in Venezuela beyond oil, right? So, there's a lot going on in the background, and I'm not qualified to comment too much, but you can see this becoming a big thing.
You mentioned that aspect about Trump, the U.S. for the first time having an actual formidable foe to be negotiating against. And this kind of flies in the face of what most people think, not most, I should say some people will say, in terms of the U.S. has got all the cards and the U.S. is dictating things to China. I take it you view the recent negotiations as not being what Trump has portrayed. And do you think that the Chinese are winning the kind of the trade negotiations?
I think so. I think they actually managed to get lots of concessions. They will continue to get concessions. I think Scott Bessent kind of wanted China to become like a vassal state like Japan was. And, back in, I suppose, April, May, he was making lots of claims that that was the way forward. The US would provide military support for countries, but they would have to kind of be a bit like Japan was after the Second World War. I don't think that's worked out too well. And I feel that China, it's not just rare earths, that gives them bargaining chips. It's the fact that they have such a big manufacturing presence in the world that they effectively are the supplier of things to the global south. And what you've seen with China over the last, since probably 2021, maybe 2022, has been a deliberate attempt to decouple from the US. So the percentage of exports to China, to America from China, as a percentage of their overall exports is now down to about 10%. That's down from about 20, I think, in 2020 or thereabouts. So they are positioning themselves, China, to be in a stronger position than perhaps any other country or region has been. And so how does the US respond to that? It's to be seen. But it was interesting that it wasn't long after the Busan meeting on October 30th that we had Venezuela.
Oh,
So
you think that was more than just a coincidence?
Well, I don't know. But the thing is with this stuff, people suggest that it's like, so Great Britain had this problem in 1870 when Germany started to be more dominant economically. And then Great Britain put a lot of pressure on India in particular. That's when you had the famines. They extracted a lot of resources from India back in 1872 or whatever. And that was their way of reacting. They could have, followed Germany and transformed their economy. Instead, they went overseas.
Right.
And, used their colonies. Is the US now going to try to colonize different parts of the world? One could imagine some of that happening, but I think
you're
it's a bit
scaring
more,
me as a Canadian that's getting told.
Yeah,
that
correct. Alberta's going,
state.
right? Yeah, my friends in Alberta are really worried. Actually, they keep talking to me. Some of them actually think it's a good idea, which is
that's true. Some of those Albertans do think it's
we
a good
don't want to
idea.
get into Canadian politics because I'm not qualified, but there's plenty of stuff on WhatsApp from my friends there who have some opinions about that kind of stuff. But maybe we're sort of not really understanding what's going on, because even in the 1870s, it was corporates, it was East India Company, it was corporates who were deciding really what was going on. The army was just there to support them. And today in Venezuela, in 5 years' time, will CNOOC, the Chinese oil company, be the one developing the oil? Does that make sense? And
or it'll maybe it'll be Hess and it'll be Chevron doing it. I've had a buddy that's been telling me for 6 months, when Trump kept telling everyone it was about the drugs in Venezuela, he says you should go watch Syriana. It's the reality is that this is all about the oil companies telling them, the president what to do because they want their asset back.
Yes.
Let's bring it back though. I don't want to talk too much about, and I'd rather focus on what you're really good at, which is China, Japan. One of the things that struck me is you mentioned how good China has become at capitalism. I'll just read you this quote that I love from my buddy Louis Vincent Gav. He says, "The tragedy of Asia is that Japan is a profoundly socialist country on which capitalism was imposed, while China is a profoundly capitalist country on which socialism was imposed. But given the chance, both drift back to their natural states." You've actually said that you think that, President Xi is anything but a Marxist. Could you explain what you meant there and kind of tell us what the opportunities you see in China?
Yeah, absolutely. And, I read a lot of Gav Karl's stuff. It's brilliant. And I think, if the emperor hadn't been maintained in Japan, it could have easily gone communist, right? So that is a very good historical comment. Like, China is naturally probably more capitalist. The point with communism in China, I feel like it was a response to invasion in China. I mean, what happened with some of the stuff in the 19th century, like, China was always going to react. And these sort of very dogmatic kind of beliefs end up being a way to galvanize the nation and bring them together. We saw that probably with the Islamic revolution in Iran, right? So that was a response to what happened. And then you have that. So, but the core of it is, I think, President Xi is actually proud Chinese person who doesn't go to bed thinking about Karl Marx. He goes to bed thinking about Ming Dynasty, right? He wants to make China great again. And actually, the last 200 years have been an aberration, as a famous Singaporean diplomat recently said. China's always had a dominant role in the world, and maybe we're going back in that direction. And so, and I also think, there's a lot of statements like they want to be central reserve currency, the reserve currency. I don't think they want that responsibility. They've always been mercantile as opposed to thinking globally. We saw that throughout their history. And they're also not necessary, and this is the controversial thing, obviously, given all the stuff with Japan and China and Taiwan at the moment. But I think a lot of what they've done has been reactionary. So you had the Belt Road Initiative that was reactionary to all the containment policies that were happening in the Pacific. I think buying gold has been reactionary to Putin losing all his money after the Ukraine war, right? So, they lost the war. So Saudis, everyone started to worry. And so I think And obviously what's happened technologically in China, which is really the big story I'd like to stress, is a reaction to President Trump in 2018, which I think Gav Kal covered really well. And, at the end of the day, you had a situation where China was flawed because even though they wanted to become a bit broader and more sophisticated manufacturing country, I don't think they were expecting that, all the restrictions on Chinese tech. And so what they did was transform their country. And now they've got amazing Chinese technology companies, and which one just listed in Hong Kong yesterday. I think it was up 50%. I think they're winning lots of commercial battles. I think there's a stat where a lot of the Andreessen Horowitz startups are using Chinese LLMs, right?
Right.
So
the DeepSeek
imagine
thing, right?
that.
Yeah.
Imagine that. Yeah, like 15 years ago, you wouldn't even think of it, right?
Well, not even 15 years ago. To your point, 2018, I think we still thought about China as much more of a T-shirt, manufacturer than a
Correct.
tech hub, right? And it's amazing how fast it's gone.
Oh, it's incredible, and only China could pull that off, probably, because it's not that easy to transform your country in that direction. And after our podcast last time, you had a few things happen, right? So I think BYD came out and said their sales were higher than Tesla's.
Yeah.
And then you had all this stuff coming out, which probably didn't get enough attention in the news, about China's aerospace industry, which is growing, and the technology they have for jet fighters and all that sort of stuff is going to blow people away soon enough, I would imagine. And then obviously DeepSeek, which
Right.
I think
Actually, let's
happened.
go back, because I think DeepSeek is being covered a lot, but you're saying that this Chinese aerospace is not getting enough attention. Tell us about that. Like, what is that? Because I wasn't aware of it. I've never heard anything about this.
Yeah, so I think what you need is precision manufacturing. And traditionally, I suppose China initially went and did some basic stuff in building materials and things like that. But as we saw, they slowly got more sophisticated. And now, in many ways, China, even before 2018, was producing machinery companies, etc., which were produced very sophisticated tools that were on a par with, say, what Japan was producing, the Fanucs of the world. After 2018, I think that just accelerated, and they needed to make sure that they could fly airplanes. They needed to make sure that they could take care of their own defense. And so I believe that you've seen some major improvements in the technology that they have in aviation, in defense. And I don't think, and we will write about this at some stage and discuss the tape, how that is sort of is underplayed a bit. And I think it does represent a growth opportunity for China. I think the global south may well be buying more planes from China going forward than they might be buying from the States, for example. And I think that is unbelievable if you think back even 10 years, that China would have a potential aerospace industry which is competitive with the world. But I think it's coming. But I need to
almost a repeat of what they did with cars. Like, to think about where they were 10 years ago or 15 years ago in cars, it was almost nowhere. And now look at how many cars throughout the world are sold in Chinese.
And that's the thing. I mean, they operate at such scale, and the whole process there is very competitive, right? So they say, okay, we're going in this direction, and then there's thousands of companies, startups that are trying to solve the problems. That creates enormous competition. And to Gav Kal's point, I think suggests that, they are really at heart capitalistic, right? It's just being directed a little bit. And I think the great companies emerge. And the focus on monopoly in the US has resulted in really one EV company in the US. I mean,
Yeah.
you got to think, what's the opportunity cost of that in terms of jobs, in terms of everything? The industry could be 3-4 times bigger, right?
Or
So
going back to aerospace as well, there's only one real aerospace company in the US. It's not like there's a lot
correct.
of, right?
Correct.
And
And
it's a
and even
poorly
that
run-
company has
Yeah.
had some issues with quality control and all the rest of it, right? So over the last few years. So there's been all sorts of discussions about, I think, I can't remember the exact news that came out, but when you have monopoly and you have government contracts and things, I mean, that doesn't sound like capitalism to me often. You know, some of these companies are not operating, they're actually dependent on the government. They're not actually independent of the government.
Right.
And
And so you mentioned the Chinese aerospace, like so you think there's an opportunity going forward. And I can understand from China's perspective why they're downplaying this. They don't need to go out and go beat their chest about it, because the last thing they need is the Americans to be worried about it. But so you're thinking that there's opportunities on that, like in the actual investment on the equities there?
yeah, I think so. It's something we're actually doing some research on at the moment. It's a sort of early stage idea, but we've noticed that I think the willingness of countries around the world to buy their equipment might be there. I mean, Chinese manufacturing is starting to have a brand of its own, and I think there's plenty of countries in the global south who might end up buying their planes. We will have a more detailed report on that, because we are still sort of very much in the midst of it. But I think these are the sort of, random ideas you've got to sort of start to think about, because if you hadn't done that, you would have missed the EV story, right? Charlie Munger got it right, or Warren Buffett, but they were early and they just could see what was going, where the puck was going. And I think Chinese industrial policy seems to be reasonably successful. They deliver on budget, on time, on brief. And that means you've got some amazing companies coming, and we're just trying to work out what they might be. We might get them wrong, but we're trying to work it out.
You just stuck in that where the puck is going for the Canadian.
I did. Yeah. I've got enough Canadian friends to pretend I really care about ice hockey. Yeah. Yeah.
You mentioned the fact that Chinese are so competitive and true capitalists. One of the problems has been, though, like that's been a strength and also a weakness, because they're almost capitalist to the point where they immediately put profits down to zero or even minus. And like we saw that with, their stupid delivery apps, where all of a sudden you were like, they were so busy trying to gain share that you could get stuff for free. And it just makes no sense. And one of the things that's happened recently is President Xi has gone and done this anti-involution, where he said that this race to the bottom is not something we want. How does that go into your thinking?
I think, with all countries that are developing, there usually is a focus on growth of sales and industry development. And that's at the cost of profit, right? And then there's a process of consolidation and a cleverer use of capital, right? So I think it stands to reason now that as China develops, it will probably be more conscious of shareholder returns, right? So I think it fits in. Where it's really bizarre is actually the use of capital in Silicon Valley, right? Because we are seeing a lot of money spent. All of a sudden, the tables have turned, right? So are we sure that all this money being spent is being used correctly, with the AI data centers and all the rest of it? Or are we going to have the equivalent of the Chinese abandoned cities in a few years' time? It's a question to ask. I'm not sure I know what the answer is, but I think the cost of capital, there's a lot of capital going around the tech industry, and how do you measure the tech industry? Like, you should either measure it in terms of jobs or productivity, right? And the jobs, obviously, Elon Musk is telling us week that kids should sort of get depressed because they won't have a job. And then the other thing that we're not really seeing the productivity gain. So there's some big questions to ask, right? So going forward, again, where the puck's going, does China actually get a better return on capital than Silicon Valley?
Well,
and DeepSeek, for example, was produced on a lot less money, right?
Yeah.
So
not only that, you're not paying obscene levels for it. Like I keep talking about the fact NVIDIA trades 33 times sales, not earnings, sales. And like there needs to be a lot of growth for that to work in the long run. It just seems insane. So I'm with you there. All right, let's move it away from China and let's talk about another country that has had problems with return on capital for invested money, especially equities, and that's Japan. And you, as we learned last time, you lived in Japan for a dozen years, way back when, and you know a lot about it. You write a lot about it. Give us, first of all, the kind of a bigger picture view, and then let's drill down and start to talk about some opportunities.
Yeah, so I suppose the corporate reform story has been going on for over 10 years, since Abenomics. Abe, for those who might not be familiar, is he came from a very well established political family. He had one attempt as prime minister, and then he came back with a mandate to transform Japan. Japan, when I left to go to the States in 2011, was on its knees. I mean, it was just gloomy, right? And what transpired was Abe-san had this policy. Central banks would do quantitative easing, there would be fiscal spending, and most importantly, there would be structural reform, corporate reform. And so you saw over a period of 10 years, the ministries, the bureaucracy, the civil servants implementing rules for corporate shareholder return and how companies should operate. And that's against the backdrop of a nation that really didn't care too much about shareholders, right? At least really until Abe-san turned up. So there needed to be kind of a reform take place. They have implemented all those guidelines. And recently, a few years back, Yamaji-san, who was actually in Australia recently doing a tour, he's the head of TSE, basically told all companies that they had to get their act together and get their valuations up and get a proper return and think about cost of capital, all those things, and really gave them about a year or so to get their stuff in order. And now the pressure's on. So my thesis at the moment is, yes, the corporate reform story is kind of old, but it's just compounding now, right? Because what needed to happen was some top-down guidance and rules set. It couldn't be the Wild Wild West. You had to have guidelines. Those have been implemented. Those were initiated, and now we'll see full-blown initiation the next year or so. And so the flywheel will start gathering momentum, and many companies will start really surprising us in terms of what they do. So what could they do? They could increase their dividend payout ratio. At the moment, I think it's about 40% on average. You will see companies take it to 80%, and those will be large companies. Buybacks, there's already been tons of buybacks. We'll see divestiture, moving away from companies. There's a lot of conglomerates in Japan. There's a lot of companies which have really random business lines. They'll get rid of those. And the other thing is commercial strategy, because what people forget is over the last 10 years, even though sales on overall haven't really increased, the economy's kind of been boring and not growing much. Earnings have actually grown about 10% a year, 9-10%.
Really?
Yeah. And that's what people don't realize. And dividends have been growing sort of 12-ish, 13%-ish. There's a bunch of estimates. But you still need top line sales growth. And I think what we're going to try to do is really analyze companies that could change their commercial strategies to actually become very, very highly valued companies. And the one thing about Japan that maybe people don't realize is outside of the top companies, the Sonys, etc., there's so many companies which have great IP, but don't really do much with it. They don't commercialize it. It's really like a corporate strategist's perfect market to go in there and transform some of these companies, right? And those are the sort of companies we're trying to find, ones which will see explosive growth on sales as well. The best example of that one is the company that does Hello Kitty, Hello Kitty, like all the kids like it. And it's on, now it's on all those lunch boxes at schools and things like that. Now, that company wasn't doing anything with that IP, even though that IP had sold more than Mickey Mouse, right?
Really?
Over the years, yeah. And now they commercialized it, they monetized it, and the stock price roofed it, right? I think there's a lot of those. And so it's not just a balance sheet restructuring story anymore, not a balance sheet optimization strategy. It's a commercial strategy optimization story. And that's what gets us quite excited, because it's a little bit more interesting to look at companies and see what they could actually do with their current business. Does that make sense?
Right.
Yeah.
Oh, listen, I understand. I can't remember who I was listening to, but it's somebody like some big name strategist, like a Michael Semblest or somebody like that. And he said that I always like to ask my friends that are, running, like the Bains of the world or wherever, where they're growing and where they're sending young people to get ready for this upcoming, amount of business. And he said that by far and away was the one place that everyone is sending money, people, is Japan. And there's a reason for that. And I think even I think I've seen some hedge funds, Point 72 or folks like that are starting desks there. And so I completely agree. Now, I think it's so interesting how you frame this, though, because I've never thought about that we're kind of almost to the point where we've all been talking about it, but now it's like it's put up or shut up time is basically your argument. And so we're going to start to see the actual changes, as opposed to the market had kind of run a little bit ahead anticipating those changes, but now they're coming in and there's going to be a lot of alpha in the individual stocks.
I think so. I think there's been significant progress made, but I think now it goes into overdrive, right? So you're going to see some really big aggressive acquisitions made, maybe overseas. What you said about people going to Japan is really interesting. I think I was there probably in the worst time, thinking back, my timeliness, but timing is sometimes bad. But now if you're a young kid, there's tons of opportunity if you can speak a little bit of Japanese to probably go there and have a really big career, because this is going to continue for at least another 10 years, if not more. So yes. And in terms of hedge funds, is there, outside of the US, is there a better market to trade long short? I don't think so. I mean,
Really?
It's big, it's liquid. You could look at last year. I mean, look at the range the Nikkei traded from the April lows with Trump's announcements to the highs. I mean, as a hedge fund guy or someone from Point 72, presumably that's not a bad place to be, right?
Got it.
To get alpha.
Do you have any names you can share with us?
In terms of stocks?
Stuff that you like, the things that we should be interested in.
Yeah, so we are going to write a lot about companies, more mid-cap, small-cap names, right? So some of those are maybe not as positive, not as, easy to trade perhaps as some names. So first of all, let's stick with the large caps.
Okay,
I think banks will probably do okay. A couple of reasons. Interest rates are normalizing. They're cheap. it's not a loan growth story. It's just interest rates are normalizing and the stocks still aren't that expensive. And
Right.
so some of the mega banks will do okay. I'm going to find a time when I buy SoftBank this year.
Really?
Because I believe, there's a lot of money is going to be made with OpenAI IPO and all this sort of IPOs that might come this year in Silicon Valley. And SoftBank has got Masayoshi Son has got his name all over that. And I think as a retail
in the price, isn't I don't know how, is SoftBank.
I honestly, I'm going to wait for the time. It's for me, I can't do SoftBank at the moment, but I think there will, we probably will have a bit of volatility this year. I'm pretty sure of it. I mean, the fallout from what's happening with China and Japan at the moment, the tensions over the rare earths stuff and what the Prime Minister has said, I mean, we will see an opportunity to pick up some of these large cap names, lower prices, I believe. Right.
Okay, so let's talk about that. Let's talk about the politics recently. Or you were explaining to me that the Prime Minister of Japan can call a snap election because she's so popular. Walk us through what's happening. Give us some insight, some inside baseball on Japanese politics and how that relates to the markets.
Yeah, well, I think there's a number of things to say, but probably it's best to start with the new Prime Minister, Takaichi-san. She is a little bit like Maggie Thatcher, in that she came from a similar sort of background, humble, worked hard, got ahead. She is similarly with Maggie Thatcher, she is inheriting a party that's kind of a bit not unified at the moment. It hasn't really been since Abe was killed in 2019, which is the LDP, which is the Liberal Democratic Party. So she's got a lot to do. It's difficult, but she's come in, and she and she's Abe-san's protege, really.
Okay.
And the thing to remember about Abe-san is, he is the grandson of Kishida-san, who back in the 1950s was very much against the Yoshida Doctrine, which made Japan subservient to the US. I mean, the family line is quite on the right side of things politically.
Okay.
They believe in nationalism and all the rest of it. And so does the new Prime Minister. She's probably on the right side. So she's come in, it was a surprise. Everyone thought it was going to be the former Prime Minister Koizumi's son, who was going to become the LDP head. She worked the angles better within the LDP to get that position. But now she's there, I think she's quite popular, right? Because she represents like a strong Japan, a little bit like President Trump, right?
Right.
And recently she's also interestingly very popular with young people, it would seem, right? I saw one survey that surprised me. And I think something to say about Japan is I think young people could have the same tendency as young people everywhere in the West, where they do become slightly more nationalistic, thinking like kind of right-leaning, right?
Mm-hmm.
And I think, I always say if there was a Japanese Nick Fuentes, you never know what could happen, right? And I think that's a real actual theme in Japan over the next few years, this desire to have a more presence in the world, right?
Okay.
And so what you had with her, she recently sort of caused a bit of a diplomatic issue with China because she effectively said Japan would come in and be on Taiwan's side if China did anything, right?
Okay.
And that is highly controversial. We forget that it's a lot of bad stuff happened in Asia, a lot, back in the day. And, it's not for me to stress any of those things, but it's still fresh across Asia, right? So a remilitarized, Japan is something that's quite controversial, right? And being so vocal, it's somewhat unsurprising that China has had the reaction they have had. But what's interesting is domestically, she's well supported, because I think there is a feeling that it's time that Japan kind of approach the world in a different way. And there is a lot of support for the increased spending on defense in Japan. So they're taking it up from 1% to 2% of GDP, which is something the US has wanted, because they wanted help. They wanted their ally, Japan, to provide some, advanced machinery to Lockheed, etc. So this has been going on for a long time. But against what she could do, if she does call an election, she'll get the mandate to really go to President Trump and say, look, you've got to take me seriously, right? And why is that important? Because President Trump is quite volatile, as we know, diplomatically. He says some things, and Japan must have a good relationship with the US, and Japan, and probably she doesn't know where she stands with him right now. So I think part of the election might be an attempt to actually then go to the US in, say, maybe end of February, if she goes down this path. And that would happen just before President Xi and Donald Trump are due to meet in April.
Okay.
And so it's very interesting what's transpiring. And I'm not an expert on diplomacy, but I think you have to be mindful of what just has happened, right? The China has reacted, and they've said we're going to ban exports and this sort of stuff to Japan. Hopefully that sorts itself out. I think the Americans might actually put pressure on Japan to perhaps water down their messaging, because America doesn't really want to take that battle on at the moment, I would imagine. But it's something to watch, and it will affect equity markets probably over the next couple of months. I mean, I think we will see some volatility. Does that answer your?
Yeah. And one of the things that, as you said this, I just thought to myself, like, boy, if this is the case where we're going to get a lot more spending in Japanese defense, isn't this like the European defense stocks of a year or 2 years ago when, Russia invaded Ukraine and all of a sudden the European defense stocks went ballistics? Is there opportunities there on Japan?
Well, I think actually in Japan, those stocks have already moved. So MHI, AHI, 7011 was a bit of a darling amongst foreigners. Over the last few years, it's moved. I think even on Friday or Thursday this week, it had a big move up. So some of those names, it's already kind of priced in. There's other names, as in Japan, and this is something we will focus on going forward, is some of the smaller names, which are involved in the defense industry, which might have 100% market share in a particular niche. Some of those, will benefit from this, and maybe those are the trades, because you could get a double, triple on those names,
right,
versus maybe 20-30% on MHI. But in general, I think it's still a good theme, right, to consider, and hopefully we'll be covering some of the defense stocks. There's another name, Japan Steelworks, 5631. There's a whole bunch of names that I've traded quite a bit over the last couple of years, and feed into that theme. So it's not a new theme. The US has been putting pressure on Japan for the last 10 years, I think, to really do more with their defense industry, even with Trump in its first iteration. Right. And now it's just. But
maybe now though they have the political, the Japanese themselves are embracing it, as you say. One of the things that a lot of people talk about with Japan though is the fact that they're worried about the currency. They're worried about Japanese yields. I think that their fears are misplaced. I think it's not as bad as they think. I think the currency is dirt cheap and then it's headed higher. I would love to get your, thoughts about the currency and yields though. Yeah.
So, I need to caveat this with, not really a currency specialist, so I don't know.
Okay.
But I think in many ways the currency is cheap, right?
Yeah.
You could argue, just like other Asian currencies are, such as the yuan and maybe the won. So it's cheap. And going forward, we might get another small rate hike in the States, in Japan. And we seemingly are seeing President Trump thinking about bigger cuts. And if he gets his guy into the Fed, one would imagine could accelerate. So the interest differential might improve, and therefore the currency might presumably get stronger, right? But I've struggled with this myself, because obviously I buy stocks and I think, well, how could I hedge it in a clever way? My only defense has been trying to find things that will go up more than the potential depreciation of the currency, I'm afraid. So, I think some of the stocks hopefully will return more than 10, 15% move in the currency. But could that happen this year, where the currency weakens? Potentially, especially if this situation with China develops into a real problem. I mean, it needs to be monitored, because
So this China thing is really, really top of mind for you.
Yeah, I think so.
Yeah.
Well, there's a couple of things, like the JGB market. Again, I'm not, but you've had bond vigilantes trying to attack the Japanese bond market since 1990. I always talk about Kyle Bass. His hair keeps receding. And because it's never really worked, but all of a sudden, would they be more active now, right?
That's why I have no hair, because I was short JJBs for much.
This is a wig. This is a wig. So what I think is all I can say is, and this is very general, but the BOJ are like the black belt, have a black belt at dealing with their bond market.
Yeah.
And they've proven time and time again that, yes, they make mistakes, but they're also quite sophisticated at times. Hopefully it doesn't become an issue, but it could be. That's one of the risks. The other risk, obviously, is the yen carry trade, right? So, we still have a lot of assets. Japanese insurers still have a lot of assets overseas. Could that money be repatriated at some point if the Fed does cut rates aggressively? Yes. But waiting for that to happen, as I said, is like waiting for Godot. Who knows when that's going to happen? It's going to be very difficult to predict it, but that's on the cards this year, I think. There's going to be months where your performance gets hurt, right? But that provides opportunities, right?
Right.
But in general,
you're not worried though about the folks that there was a time Kyle Bass used to talk about more about Japan collapsing than China collapsing. He's got a new worry. So he's moved away from Japan, but there are still the Japanese bears out there that will start telling us how their society is going to collapse under this huge weight of JGBs and stuff. You call BS on that? That doesn't keep you up. That doesn't stop you from buying stocks.
No, I don't think that's fair yet. And I think there's with Japan, it's quite interesting. The media sort of focus on a few things that aren't necessarily accurate. The whole foreign thing is interesting. They say Japan is facing the same sort of issue with foreigners as Western Europe or Canada or something. It's not the same at all. It's a marginal thing, and it's much more complicated. It's tied in with some contributions that were made into the LDP by some foreign groups in Asia, one in particular in South Korea. So it's completely not like what Elon Musk is claiming Europe's going through at the moment. But again, it sort of becomes like this focal point, but it's much more nuanced. And the same thing with Japan collapsing. I don't really see that happening. I think what's happened is a wealth effect amongst people. House prices are going up, equity markets are going up, Hopefully that means there's a bit more, excitement in the economy. So there's things that might counteract things. And, but again, could Japan have like that Liz Truss moment? No, like with in the UK when she came in power. Remember Liz Truss? Is it Liz
Oh yeah,
Truss?
for sure. Yeah. No, we all know.
No,
The
I
lettuce.
don't. It's
The
too
lettuce.
rich. Yeah.
The
Does that make
lettuce.
sense?
Yeah,
Yeah.
got it.
The
all
lettuce.
right.
The lettuce.
The,
Yeah.
the lettuce. All right, let's just finish up with maybe a general question. We're sitting here at the start of 2026. When we look back and at this year, this to come, what do you think is going to have surprised markets the most?
This year.
Yeah, like this coming year, what will be the surprise?
Okay, I've got one.
Okay, good.
I think it's going to be Hong Kong becomes the NASDAQ of Asia, and all the expats who are many of my friends who have moved to Dubai and left Hong Kong will be going back, because I believe we are on the cusp of recognition that Chinese tech has arrived, is competitive, and in some ways better than what's produced in Silicon Valley. Right.
Wow.
That's what I think. Yeah.
That's a good one. I love it. Actually, I had some buddies that went to Hong Kong recently, and they came back saying they all wanted to buy real estate. They think the real estate's cheap, and that they very much the same way with you. They thought it was going to become the financial hub of China.
Absolutely. I think it's going to be huge. And if I didn't like Australia as much, I would head there, but I love it down here. So, but if you're young, I think it's probably a great spot to go. Right.
Got it. All right. So before we let you go, why don't you tell people about your letter, and then also the interesting thing you're doing in terms of Japanese? You're expanding it with some coverage. Tell people about that.
Yeah. So I write Discuss the Tape. It's quite general, and it covers a lot of topics. But I'd love anyone to sign up and listen to what I've got to say every week. But what's been requested is a much more focused one on Japan. And I work with a young chap called Jaya Donahue, who's much smarter than me, more quantitative. And we will produce what's going to be called Kabu Japan. Kabu means stock. And what we will cover are companies which obviously there'll be the top names we will talk about, the banks, the soft banks, the Sonys, but we will look to uncover opportunities in the mid to small cap names, because I think that's where the big opportunity is.
Got it. So that's Discuss the Tape, and with Discuss the Tape, you're going to get the Kabu. I don't know how to say it. Japan. That's going to be included.
Yes. Yeah.
Right. So they should go sign up for Discuss the Tape, and they're going to get this new feature where you're going to be talking about Japanese stocks of all, but basically all the alpha that's going to be with that small to mid cap Japanese stocks. That's great. Yes, that would be wonderful as people were happy to sign up. Terrific. Well, Mateen, is great getting an update from you. I hope things, I heard from my buddy Rupert the other day that it was almost 40 degrees or 40 degrees in Australia. It's hot. It's hot. And he's in Melbourne. This is, it's hotter up in Queensland, right? So, oh, wow. So it's even hotter. Okay. Yeah. Well, as a Canadian that's sitting there in -10, I am very jealous. I always joke and say to Rupert, I always laugh and say, I wish my relatives that came to Canada 200 and odd years ago were criminals and got sent to Australia, because I'm getting sick of the cold. Yeah, it was the greatest trade ever, right? And they got land. They got given land. And so, it was, who'd have known stealing a loaf of bread would have got you here. So thank you very much. I really appreciated your time, and thank you for inviting me on. Oh, our pleasure. Thanks for all those wonderful insights. Take care. All right, Patrick, lots to talk about. It's been a while. Oh, buddy, welcome. They're jonesing for a talking chart. We have not talked charts for it feels like a month. And silver moved so much since we had a last episode. There's so many cool things to talk about. But let's hit the most important headlines without charts right off the bat. One,
The jobs numbers came out. It was like, and why it didn't end up being a big mover, but it was the first potential important news that could have moved the market if it was an outlier number, and it wasn't. It kind of came in flat. But the reason I thought it was important to watch was because both the dollar and rates markets were very sideways and quiet for weeks. Like the entire holiday period in this first week of January was so quiet on the rates markets, and looking for something that's going to wake up the markets and start some sort of a move. And the jobs numbers could have been that. It doesn't feel like that was the trigger on that. Did you take away anything from the jobs numbers?
Well, specifically from the job numbers, the part that kind of amused me was that if you look at the actual payrolls, they came in light, but on the unemployment rate, they went and they changed the way they do their seasonal adjustment. And lo and behold, Patrick, what do you think the change did to the unemployment rate?
Well, absolutely. Unemployment rate has suddenly gotten better. America's on recovery, buddy.
Exactly. So nothing like a little seasonal adjustment to fix the high unemployment rate.
Absolutely. So the second thing that was supposed to be released today, or was supposed to be talked about, was the Supreme Court was supposed to rule on the tariffs.
Yeah.
And as far as I'm aware, nothing has been, it's been dodged or hasn't been announced.
Yeah,
Is that correct?
actually, there's been an update since we've done this. It's going to be announced on Wednesday.
Okay. So that, and that's the interesting thing. Like, okay, in your mind, does this offer a fake out? Because the first reaction, let's say they slam the tariff shut. Like they say, you can't use this 1977 provision or whatever it was that allows them to have this power, and the market obviously will take it bullishly. You're going to at least a first reaction.
I don't even think it's that obvious. I think you could give the tariff decision to a bunch of traders and nobody would really I don't know if there's an edge in knowing the tariff decision.
Well, the reason, I think that my bias is that the markets will initially react bullishly to it, but I feel almost immediately within a reasonable period of time, Trump, they've got a plan B, and they're going to use some other loophole or some other way to try to dress it, and then the market will give it back. And so point is that while I do think that the first reaction, if the ruling is to end the tariffs, will be bullish, I don't think it's one that starts some sort of big new bull trend move. This is my view anyway.
Well, here, I'll tell you, I was asked in my chat about it earlier in the week, and I said, I don't know what the market's going to do, but I know, or I suspect I know what the Trump administration will do. And I said, if they win, there'll be more tariffs, or tariffs will continue. And if they lose, tariffs will continue. They're going to find a way, to your point, to continue doing tariffs. Later in the day, Scott Bessent came out and in essence said the exact same thing. So to your point about the market going up initially, I'm not even sure it goes up initially because everyone is now being conditioned to, we're going to do them no matter what. So I don't know. Maybe you're right.
But there is headline porn, and people react to that stuff.
I don't know.
One way or another, it's short lived. If there's a reaction, it's not like it's going to start some sort of big move on that front.
Yeah, so
all right, so
the fact that we both agree that it's short lived means
then it's definitely going to rip.
The start of the next move will be born right here.
Oh my God, I just goochered it. No, just no. Actually, you just got to stay impartial. Say I have no view.
I have a view that it's not going to matter, but that's
okay. That's perfect. No, that's a divergent move. That means we don't agree on something, and that's fine. Okay, so let's talk charts. Let me pull this up over here. So the S&P 500 up 33 points. Now we've been in a pretty clear bull trend. So we were highly concerned about the bear conditions going into October and November. And the sell-off, while it wasn't large in percentage, it was like a 6% correction. We got some pretty extreme levels, like on fear and greed index, it got down to like 12% or whatever. But we had things like the breadth of the market get down to 30%. Point is that there were some pretty oversold short-term conditions. VIX had a big spike, all these different things, and it led to a short-term low. Let's just, so what it is, and now the market since then and throughout the holiday period gravitated higher, whether gamma pinning, JP Morgan whale kind of drew the market a little bit higher over the holidays, whatever. We've been working this higher highs, higher lows, markets crawling higher. And here we are pretty much going to print 7,000. Like, I mean, at this stage, the futures are 5 points away. In fact, did they actually even print it today? No. We had a high on the futures of 7,001, but that's irrelevant. The cash index didn't get up there. The cash index is still 40 points away from 7,000. But historically, big, massive round numbers like that almost always get hit and tested. So I almost think it's a layup given that we're going to at least print 7,000 on the upside here on the short term, as this market actually measures out moves all the way up to even 7,100 on the upside. So this market is crawling higher. But what's really interesting to me, Kev, is looking under the hood. We got to look under the hood and what the heck is going on here, because there's some super interesting things happening in these markets that can't be ignored. Now, the one most blatantly obvious thing, which is one scenario that could have happened, I wasn't necessarily giving it a huge probability, but it's certainly the unfolding reality, is that the breadth has massively returned, and you have huge new leadership in spite of the fact that the Mag 7s are selling, which is that it's a sector rotation story. Basically the selling of the mags, profit taking in the mags, and it's sprinkling basically everywhere else. And so I want to talk about that on the charts, but I'll let you first make a comment.
No, I wonder who might have, proposed that this is how this might unfold.
I have no idea. Do you know any tourists
I don't
that
know
might have Listen,
I,
it was always a scenario. It was just not my first go-to one.
And I wrote about this earlier before Christmas or around Christmas, and it was one of my buddies that said something. He's been managing a big, huge hedge fund forever, and he told me, he said, I was up 30 or whatever percent in 2000, and I wasn't short a single stock. And I was like, what? Like I couldn't believe it. And I went and looked. I pulled up the sector returns. And Patrick, the first 6 months of 2000 was wild. You had things up like 40%, like food, utilities were up 30 or whatever. And meanwhile, hardware, tech was down 50, 60%. And and this is one of the things that I continue to stress. People,
or as an example, in 2008, while banks were having their faces ripped off in the first 6 months, energy stocks were up 70%.
But that one was different though, Patrick, because that was the only thing that went up in 2008. And 2008 was actually much more of a complete and utter sell-off of the entire market. And it was uglier. And so I don't put 2008 in the same camp as the 2000.
I was just simply trying to highlight that there were things that were working.
There are things that go up. But to me, the 2001 was so, just like eye-opening, because the amount of stuff that went up, it wasn't just one sector. There was tons of it. There were tons of cheap stocks that flew. And I think that is what's happening here. Now you're about to show us a whole bunch of charts that are going to show this. There's things that people have just left for dead that are now trading like tech stocks.
Yes, but what's also interesting is some of the things you would have thought like consumer staples that should have been rebounding have actually been just in a bloodbath murder. But let's talk about what has been leading this. First of all, I want to highlight one important thing. So starting off, that the Mag 7s look like shit. They literally, this is the Mag 7 ETF, and you can see as a basket, it has not moved. And what's interesting in that Mag 7 basket is obviously NVIDIA. And what's interesting is that the AI bubble has not burst. Let's start off with looking at the SMH, like semiconductors, fresh new highs, making a run on the SMH index. You take the kind of AI bubble poster child market of the Kospi, the South Korean index full of Samsung and Hynix or whatever it is called, ripping to new highs, like it's going to 5,000 on the upside. So a lot of these AI names. So this is not a Mag 7 where AI blew up and they're selling. The Mag 7s are just not participating, while actually many of the AI stories continue to actually work. And that so there's clearly selling in this Mag 7. And I know the other one, the old school FANG index, before the Mag 7s came around. But look how distributive the FANG index is, obviously with the NVIDIA's, sorry, not NVIDIA's, but the like Netflix and shit like this in this basket. But you can see broke below the 50-day, can't even get a rally going on the upside. And when you even look at NVIDIA as a stock, while it bounced a little bit higher, this is not some bull market where you have the semiconductor ETF ripping to fresh new highs, running for 400 on the upside. And NVIDIA, the largest weighting inside that basket, can't get off of its 50-day moving average.
Yeah.
And so there's some really interesting things going on under the surface here. And so this is what's not working. So what has been working? Well, one of the problems I had back in October was that the financials weren't participating. Suddenly, the financials are one of the hotter spots in this market, and they're actually behaving in proper leadership. Right, like they're beta one, they're working their way higher with this market, and like the Goldman Sachs of the world are ripping, the JP Morgans of the world are in proper bull trend. Like all of the banks are doing well, but the other place that continues to rock and roll is the defense contractors, aerospace defense, and like your General Electrics, General Dynamics, whatever. You go through the whole list, Raytheon, Boeing, like all of your defense contractors, all the industrials, these are all suddenly taking really clear heavy flows. And so it's truly kind of widened in the participation. But what's interesting is obviously small caps. Look at this beautiful breakout small caps did. This entire flagging formation was just a 50 just a retest of the 50-day moving average, and breakout here, which is measuring out to 2750 on the upside. But what's interesting is the equal weight S&P 500, like clear breakout to fresh new high, running like, for instance, it's up almost 100 basis points, while the S&P is up only 50 basis points. Like, I'm exaggerating there, but like you have actually continued to demonstrate that the broader part of the market is where the performance is happening, and those market cap weighted Mag 7s are like an anchor thrown out the boat that is dragging behind and slowing everything down. And so there's clearly a bull market underway. Materials are running. The commodities are hot as freaking hell. You have a different, like the Alcoas and all these other things are all running. And so that money is moving around. So this S&P, it looks like it's nice and calm, just crawling higher, but it doesn't really tell the story at all.
Yeah, completely agree, Patrick.
Right.
And I think this just started. Like, let's face it, the reality is that no one, or I shouldn't say no one, few are positioned for this. And even though it feels like the market's doing well, I suspect that a lot of people are looking, like a lot of the active managers are looking at their portfolios and going, I'm not long the right stuff.
Yeah.
Right.
Absolutely. But what's interesting, the one sector that I thought would have turned around in all of this, and it had a positive couple of days here, are consumer staples. like when you look at obviously nice recovery in the last day or two, we'll see whether that ends up being a bottom. But the General Mills of the world, fresh new breakdown. The Procter and Gamble's of the world, fresh breakdown to lower lows. The Colgates of the world, actually nice little reversal in Colgate on the short term. But the point is that almost all of these major consumer staple names outside of Walmart have actually been suffering. Even like Costco has been in a monster downtrend, a few couple of positive days turning this in here. But this sector, for me, I thought when a sector rotation was going to kick in, consumer staples would have been at least one of the places where diversification would have been going to. Maybe it's just starting. Maybe this is just the first signs of this sector finally getting a little bit of love.
Can I just jump in before you change sectors? I'm not sure about all the pricing, but like, for example, Costco has been a quality name that the quants have just piled into. And even though it's a great company, nice stable earnings, it trades at a ridiculous valuation.
Well, okay, let's take Target, which sells at a 12 PE, right? Like whatever. The point is
I don't know how many of them are like the Costcos of the world.
Yeah, Costco had its own kind of unique story that way on that. But even the money keeps going into the General Motors of the world and the Fords. Try to tell these auto companies that there's a K-shaped economy. It's like somehow.
Well, can I push back on that one?
Yeah.
Because I think that General Motors and Ford are two of the few auto companies you can own. And yes, they're terrible companies. They're not well run. Like I'm not sitting here telling you from a fundamental basis that you should be all over them. But what I am telling you is from a political point of view, that Trump is going to do everything he can to protect these companies. And we saw that this week. We saw him, Bessent, highlight how they're going to make it so you can write off interest from borrowing against buying a car, but only if it's American made. And so we have this situation where these companies are in essence protected, and that is why they're doing so well.
Okay, fair enough. I actually thanks for that perspective. I didn't go deep enough to understand that, but I mean, I still don't think it's. I still think it's ridiculous to buy them at these prices after such a huge move.
I don't know, Patrick, because they're protected. I'm not sure.
General Motors doubled in its price.
Yeah, but it was cheap before. Nobody owns it still. Listen, I'm just saying, be careful with the notion.
Okay, well, listen, I'm not.
These ones, politics.
All I'm just saying, you don't have to short it now. You just, I'm just saying that, there's places to buy value that.
Okay, there's other stocks that are cheaper that people haven't chased. Yeah. I agree, but these ones feel like a quiet stealth bull market that nobody's talking about.
So I want to go back to the S&P. So, okay, anyway, this sector rotation's happening. This is a given. So the question becomes, is there something that could spur material market volatility in the first quarter of the year? Is there something that makes you feel that we could have some form of a market correction in the first quarter? Are you in any way bearish?
Well, so you know me, I've been bullish a lot of the other companies for a little while now. I've been arguing that we're going to get a meaningful rally in some of those things like the Alcoas of the world. I recently highlighted energy. I still think that those start to work. I am still hugely bearish on Mag 7, even though they're selling off. I think this is just the start. These things are way overpriced. I still think it's hilarious that people are trading NVIDIA at 33 times earnings without even thinking about it, and they're all trying to buy.
Okay. Oh, so let me put it this way. Yeah. If the Mag 7s go for a 20 to 30% correction, where do you think the S&P goes based on that?
Well, so that's where I was going, is that I think that it's going to get a lot worse in the Mag 7 land. And does that drag the S&P down? Probably. I've been telling people, just don't worry about the S&P. Stop trading it. it's kind of crappy, right? Like go trade the equal weight or go trade small caps or something like that. You don't need to have a position in the S&P 500. It's a tough game. And not only that, I think that there's better opportunities in individual stocks. And one thing, Patrick, you were highlighting all the different rotation. And you were also talking about how badly the Mag 7 are doing and the FANG, the New York FANG or whatever.
No. They're not doing badly yet. They're just not participating.
Sagging, no, they're not participating. They're sagging.
They're not participating.
On a relative basis, they're doing badly. One of the things that I thought was interesting was that we had the SanDisks and all these memory companies exploding higher, like just flying. And part of the reason that they're flying is because they're able to extract more money from all of this AI build out, right? Like there's a huge demand for memory, and they're able to raise their prices. And so we have this happening also in Intel. Said the same thing, that they're getting some pricing in terms of selling their CPUs because there's so much demand for the AI build out. And so what I think we're at the stage where the AI build out names are actually super expensive, and everyone else that is selling to them is able to extract more money. And it's almost the second order effect companies that you should be looking at if you're a true AI build out bull. And I think it just shows you how advanced this whole cycle is. But going back to your first question, do I think that the NVIDIAs and the Microsofts of the world can go down by a third to a half, which I think they will, and not have the S&P down? No. It's gonna be painful. And the real question to me, though, Patrick, is when that happens, do we eventually get correlations rising? And then we get VIX rising and the whole, dispersion trade and all of the option things that have been, precariously perched that have just allowed this melt up to happen. Does it all come unglued at once? I think the chances of something bad happening are more than people expect. Okay. But that still doesn't mean you shouldn't own the other names instead of the Mag 7.
We're not trying to tell people to liquidate their portfolios. This is about what I was trying to get to is portfolio hedging, because look, going into the holiday period, I actually was anticipating the VIX to gravitate to the bottom of its ranges, because it's a very typical thing. If the holiday period ends up being a nothing burger, then naturally, when realized volatilities are narrowing, implieds narrow, follow. It becomes like a natural contraction of everything. It becomes a van up tailwind, and all these things are happening, driving the market. But here we are, almost halfway into January. Not halfway, but like we're no longer January 1st, and the first quarter of the year has had a lot of significant volatility historically, and the VIX and volatility broadly beyond just 30-day volatility is actually pretty calm. Like even 3-month vol at 18 handle is basically cheaper than it was at any point last year.
Yep.
Right. Like, so we're at a situation where right now buying insurance it's sort of like, I always use the analogy of, do you buy in, if you try to buy insurance on, let's say you own a property, a beachfront property out in the Caribbean, do you buy your hurricane insurance in a normal period? Because if you try to do it once there's a storm out there, then the insurance company either won't sell it to you or will charge you a monstrous premium to buy your insurance when you're late. In the same way, do you front run and say, I'm buying insurance just because it's cheap? Or do you wait till the storm starts and then have to pay a vol premium to actually buy insurance? It's like, should one be taking into the calculus the fact that they're right now here in the second week of January, it's not that expensive to hedge here.
So great points, Patrick. And to your point about buying insurance after the storm, there's that saying on Wall Street, it's like buy your straw hats in the winter, meaning you buy your protection when you can and not when you have to. One of the things that I think that's difficult, though, Patrick, is that right now you're looking at it and you're saying that the volatility is cheap, but on a realized basis, I believe, I might be wrong, but I think that it's still trading fat versus what we're realizing.
But this is because the realized one is backward looking into the holiday period.
Well,
That's
I think
not
it's more than that. I think it's also backward looking because realized vol is being cheap because correlation is being so low.
Yeah.
And that ultimately is what we're experiencing. So right now we're getting the market rallying. The Mag 7s are going down or sagging. Let's stop calling them going down, sagging. But meanwhile, everything else is rallying. So we have this, this Goldilocks. And that's why I kind of highlighted the fact that I worry about this correlation trade ending, and there might be more unstable things happening under the surface in terms of the way that the option books are setting up. And Jim Carson has been talking about this for a while. And I might also just kind of throw this out there, Patrick. I don't know if you've been watching the geopolitical situation, and usually I'm the last guy to start talking about worrying about the geopolitical issues, because usually the market has kind of freaked out about it and has priced it all in. But it feels like the market is awfully complacent about what's happening out there in the world.
Absolutely.
It's kind of hilarious
the statecraft is going full throttle, and geopolitics are becoming a storm. But the market so far, the moves that the U.S. is doing, on a balance, there's negatives, obviously relationship breaking, trust from other countries deteriorating, but it's offset by the fact that they're putting themselves in a better situation, which makes at least initially traders not give a shit. I'm just not saying that
I think that's how it's getting spun. I'm not sure that that's correct. And just because it hasn't occurred immediately, like the ramifications of this haven't occurred immediately, doesn't mean that they're not simmering below the surface. Like, you don't know.
It's a good example of that.
Thinking. You don't know what Putin's thinking. They might be pissed as all AF.
Oh, it's a good example. Like, not a great example, but like for instance, 2 months before the COVID crash, it was becoming pretty clear that COVID was a thing, and the market just didn't care. The market just didn't care. The market didn't care, and then suddenly everyone cared all at once.
Right.
And this geopolitical situation could be like that. It was like right now, no one cares about Venezuela. No one cares that they're making a move on Greenland. No one cares, and then suddenly, just like a Liberation Day, suddenly one day we wake up and it's like, holy shit, this is like
they did it. And to your point about the vol, you're right. It might be trading rich against historical, but the reality is just trading cheap in terms of an absolute level. So I'm with you there. And one of the things that makes me laugh is how many times I've heard people say Trump won't let the market go down. Trump won't let oil go up. I'm like, since when did we ascribe all this like omnipotent power over the markets to leaders? The reality is, if we think that they had so much power, why did we have the global financial crisis under Bush? Was he just
but also Volmageddon, the Christmas massacre, all of these things happened under Trump's watch.
Yeah.
The point is that the stock market is okay. Will Trump try to orchestrate a save before something turns into an awful bear market? Maybe, but a market correction like Liberation Day, these things will happen under Trump's watch. There's no such thing as like he's going to be able to make the market avoid a 20% drop.
Yeah.
There's no freaking way. Yeah, I mean, Liberation Day just proved it. Liberation Day proved it because there's a 20% drop.
Well, I think that the pushback to that would be that once he flip-flopped or he tacoed, we had the rally. But all I'm saying is that as you become more convinced that he's not going to let it go down, the more everyone's all in and the more difficult it is for him to keep it up. right? And I just think it's funny that we have this situation where everyone thinks that he's able to control these things as much as he can, as much as they say. Like oil, sure, he's trying to influence it, and I think he's done a good job at convincing OPEC to pump more. Biden did a good job at selling down the SPR and, taking the pressure off the front end of the curve. But those things are done. Like that's already in the price. We're already there. And then Patrick, how about this? How about the funny part about them being smart enough to book all of these events, these geopolitical things over the weekend? It just goes to show you how much they're working on it, right? We had the Iran. Remember when they bombed Iran? That was over the weekend. I think there was a couple events that was over the weekend when we had some.
Oh yeah, so you.
And then this time with Venezuela, it's over the weekend. And so they're obviously trying, and I'm not disputing that they're trying to influence prices. But I think eventually markets are bigger than any government. And you can say, well, yeah, but then he's just going to print. And I'm like, okay, great. He prints. That makes inflation. That sends the dollar down. It's just not that easy. The markets you can't influence it as much. You can't control it as much as you think you can control it.
But, okay, there's a second factor. And I want to move on, though. But there's a second factor is that right now there's a structural belief that Trump can remain in control of the situation. But then there's a second factor of when things move and suddenly there's this moment where everyone's, oh, this is beyond Trump. Yeah. This is like this is not something that Trump thing. Like there could be a moment where it's like, fuck, the markets are on their own. And like that, you can't assume that Trump will just somehow be in control the whole time. But okay, so let's talk markets.
The fact that no one thinks that can happen is part of the reason that actually creates the crisis where it can happen.
Yes.
Right? If everyone's worried about a crisis happening, then it's
think of the regional banks. Regional banks were supposed to be the next bear market, and everyone was so sure. And then there was during that regional bank crisis a couple of years ago, that was the most consensus thing that the U.S. was going into a recession from an analyst perspective, and it became nothing burger.
Right. In 2023, 2024, everyone was bearish, and really negative on the economy. And they would ask me, they would say, what do you think? You think we're going to have a crash? And I said, we're probably not going to have a crash. And they go, how can you be so sure? And I was like, because you keep asking if we're going to have a crash. Oh, yeah. And the reality is that if everyone's worried about a crash, it's probably not going to happen. So this feels to me like the opposite of that. This is everyone's telling me there can't be a crash. So it almost feels like the increased chance of a crash is out there.
And insurance is dirt cheap. Okay, so let's move on because listen, I really want to cover a bunch of stuff there. I actually let's just actually punch through these. Number one, the dollar. Now listen, the dollar bear and just like Trump will save the markets. Everyone is convinced Trump wants a weaker dollar, and the dollar's going down. And what's shocking me is the dollar is not behaving that way. And when the dollar is behaving differently than consensus, it's worth watching. What's interesting is that dollar put in a double bottom and put in a right shoulder, a cup and handle formation. It looks like it's attempting to actually move higher. And I don't hear anybody I haven't heard a single bull thesis out there. And I'm not actually trying to predict it, but the reflation trade was anchored off of weak dollar. It worked so well last year. Could the dollar be a big surprise? Because every year there's always some sort of big surprise. And anyway, I'm not going to go deep on this, but the dollar in the last week has done some surprising strength. This is an attempt to get back above that 50-day moving average. It did not make lower lows. It's created a 9-month basing formation. Let's see what happens here, Kev.
Okay, I'm not going to push back. Let's keep going.
All right. So the next thing I wanted to let's talk about gold and silver.
Okay.
Gold almost back up to its 52-week high. That one day that we weren't running our show. We had a Christmas special going on, but on the 29th of December, there was a 200 plus point down day, and that's it. Gold turned back, right back. What's interesting is it didn't even test a 50-day moving average. And overall, that entire pullback was just a 50% retrace. So it really has yet to do anything bearish. It's staying in a very decisive bull trend and going higher. But where the real action was in the last 3-4 weeks since our last episode was what the frig happened with silver. Silver went full parabolic, got slammed $12 from peak to trough in one day. From it gaps up and runs to $82 and drops to $70 in less than 24 hours. What a freaking insane move. Now, a lot of times when you see a reversal like that, think of the last silver bubble, that usually was a nail in the coffin, and that usually started some sell-off. Oh no, not silver. This time it fucking this thing like honey badger shit here. Like
it is honey badger. That's right.
Like literally they come back and rip it back for a retest of its highs, dips again, right back up to its highs. It's running. Now there's a bear thesis, not a bear thesis, but there's short-term flows concerns because, and I wanted your take on this because there are a few places we're writing about the fact that the Bloomberg Commodity Index is doing some rebalancing here next week. And somehow, silver has become like a 13% weighting in the index or something. And that the index rebalancing is going to drive negative flows here in the next couple of weeks. Have you done anything on this? Have you followed the story?
Yes, Patrick, I wrote about it in November.
Oh, you did? Oh.
And you know what? I think I messed up. I wrote about it in November. I wrote about it so long ago that everyone forgot I'd written about it. So lesson learned that I should wait, even though I had kind of highlighted this. So for those who don't know, the BCOM index, which is the commodity index that a lot of folks index to, they go through an annual revision where they reweight all the indexes or the commodities back to more of a standard weight. And because gold and silver have ripped so much, they have to sell those. And at the same time, they have to buy oil and nat gas and other things that have performed poorly. And it is a huge, huge rebalance. And for those that are interested, it actually occurs over 5 days. It's over the BCOM roll, what they call the roll. And that is started today, Friday, January 9th, and will go for 5 business days till next Friday. So it's 20% each day. I think I've got the facts right. And I actually thought, Patrick, that because of the volatility of gold and silver, that there would be very few hedge funds that would be pre-positioning because it would be too scary to pre-position. So therefore, they would the rebalance would have a higher effect on the commodity price. And yet here we are today on Friday afternoon or Friday at lunch, we're taping this, and silver is up 6.5%. Gold's up $125 basis points. It's just absolutely insane. It seems that the market is just eating up any sort of selling that there is out there. To your point, is honey badgering it. I've given up trying to understand what's going on. These are small markets in the grand scheme of things. And it feels to me like I look at the action of today. I think a lot of folks are worried about the weekend. I think that there's high degree of geopolitical concern, and they're rightfully reaching for gold and silver.
Right. Well, there you go. And like gold miners, 52-week highs, like the honey badgers live and well here. So anyway, gold, silver running. And do you think that there could be pressure though on silver next week?
I thought there would be. I thought it would start today. But obviously I'm completely wrong.
The obvious is obviously wrong.
Yes, that's right.
Thank God we didn't both agree on it. All right. So, but you know what though, I converted all of at Big Picture Trading, I converted all of our silver positioning to bull call spreads. We were up so much stupid money on silver. Why would you take almost all of our options were like close to Delta 1 because they were just so deep in the money.
Yeah.
And so we wanted convexity back in the trade. So we converted all of our long positions into spreads. And so we're still participating on the upside, but at a much smaller pace at the net delta, right?
And for those who want to learn more about
oh yeah, no, don't say it. Okay, so thank you, but let's move on because I want to talk oil,
Okay.
and I can't be more bullish.
Oh no, Patrick.
No, I'm sorry. I know you wrote a
This
piece.
is what we're gonna do. This is what we're gonna do. I'm gonna shut up, and it's hard
and
for
not
me.
say anything.
I'm gonna shut up for 5 minutes as you talk about oil. Good luck.
No, all only thing that, and I did a little YouTube video on it earlier in the week, and
Like and subscribe to Patrick Serezna YouTube.
okay, I did a video on it earlier in the week, but I was highlighting, and something that I've been talking with my members about at bigpicturetraining.com. No, but was the fact that every time oil's gotten hit with some sort of bad news and started selling, it's being bought on dip. And when a market is hit with negative news and it stops going down on the news, and buy on dip traders reverse it each time there's a negative news, means there's accumulation and there's a base. And the fact is that we're seeing this. And when this kind of behavior is there, when it's then confirmed with a technical breakout like we are seeing today, which break it pretty much toward December highs, after all of this, that means that like, what the fuck is going to take oil down? If this kind of news is not causing it to trade to 55 and 52 on the downside, then what will? I think that 2025 was a nasty bear market for oil, but this is a new year, and things may pivot, and maybe this is where that commodity rebalancing flows will actually give a bullish tailwind to some of these energy markets that were so beaten up in the last little bit.
From your lips to God's ears.
Okay. By the way, just quickly on the energy names, obviously the chevrons of the world were the big immediate reaction winners, but obviously the single biggest winners got to be the oil service names, Schlumberger, Halliburton, the ones that will probably be boots on the ground to rebuild Venezuela's oil if Trump gets his way. And but it really is a tale of two types of energy stocks, because if you're like in a Canadian Natural Resources, which has heavy Athabasca oil sand exposures, heavy crude, it's dragging. But then you turn around and look at the ones that will profit the most from a potential Venezuela. They've all been getting huge bull tailwinds. And so it's still actually a stock picker's market within the oil basket, especially a lot of natural gas stocks dragging. By the way, I got killed. The Widowmaker got me, buddy.
That gas?
Widowmaker got me.
Well, at least you weren't doing the optionseller.com.
No, I didn't get me that way. But
I know you don't sell anything, or very rarely. So,
but what was the brutal part was that I'll make a confession. Like, I love the convexity options. I construct all sorts of structures to make sure my risk is managed, and the UNL options chain is brutal. Like, it doesn't even have one. It's like closed for business, and so I had to take a Delta 1. And that move happened so fucking fast.
But why don't you just trade nat gas
futures? Because I wanted this trip. I did.
Why not just trade like it's a pain in the butt, but just go let's say
I didn't. Okay, I get.
And you just do one option of each, whatever.
I didn't.
I know it's
the point is
annoying. I get it. I understand.
But I was so convinced that this is just, it makes a fool of me. Like, I was so convinced that this was the turn point for nat gas. And I ate it on this one. This is it was brute.
Well, it's very big of you to actually say that. Most guys are winners.
Yeah, I know. It's I've had a lot of winners last year, but this one here is it was the kind of like wah trade of the thing. But the question is, do you think nat gas will take some flows from that rebalancing?
Oh yes, so there's buying there too. I just don't know if that moves it. To me, Someone was asking me about nat gas the other day, and I was like, oh, you know what? I still think that the surprises will be to the upside eventually. But the trouble is, it's so weather dependent. It's just so tough to trade. Like it ends up being all just a cold front comes, and then all of a sudden a warm front. And the other thing is that you'll be sitting there, and all of a sudden that gas will just all of a sudden just sell off. And you're like, what's going on? What's going on? And you'll be looking for the headline. What you don't realize is that there's some just like meteorologist somewhere that's looking at things and has changed his forecast. And that just causes everyone to sell it. So it's a very inside baseball type of market. And one thing that I think you're correct, though, to say is that one of these days we are going to have $5-10 nat gas. It's going to get squeezed. There'll be something that happens. There'll be some weather. It'll be some extreme weather, and it'll occur.
But right now, it looks like so brutal. It's dog shit. Anyway,
it's like
enough about that.
Like that's trading the nat gas is like trading the VIX. You lose, and then all of a sudden you make it all up in like a month.
There you go. Okay, so let's talk about some of the other things. By the way, gold's measured move is I forgot to mention the measured move for the upside of gold is actually at 4,900. The interesting part is that silver and a lot of the other precious metals finished their moves. So the question is kind of, will we see a scenario where kind of gold will just kind of march to the beat of its own drum, even if the other precious metals cool off? Is like a question that I'm trying to solve. Is like, do you basket all four precious metals and assume that when three of them end, that means all four are ending? Or can gold is the only one that legitimately is bought by central banks, right? And I don't know, do you basket all four, or do you think that they can diverge?
Oh, they can diverge huge.
Okay.
Like they could diverge huge, which we've seen. Silver is being the star by far, right? Like gold is actually in the
last to me
months has been lagging versus
silver. Silver is so overbought, yet gold could easily have a $200 per ounce punch on the upside. And so I think that my view is that you want to be biased toward gold here from a perspective of volatility, because silver might go up $10, but it could give back $12 in a day, like it did the other day. Like it's so much unpredictability now in that parabolic move. Listen, I want to briefly touch on
1 second. The honey badger might eat a cobra by accident and have a little nap. And for those who don't know, go Google the original honey badger and go to YouTube and watch it. It's like 5 minutes of the greatest over narration ever made of a natural.
It is literally the best thing that's
you got to go watch it.
Absolutely.
Okay, keep going. Sorry.
Oh, okay. So the next thing that we need to just briefly touch on is the fact that Trump unveils this $200 billion mortgage bond buying an attempt to kind of guide the mortgage markets and try to stimulate things. Now, listen, first of all, let's not get into it. I mean, it's going to happen. What I wanted to just highlight was the quiet market has been the home builders. They've been dead for a while. And the question I'm asking, did Trump just light the match to start a new run in the home builder space? And that's the only question I want to offer. Do you have some insight you want to offer there?
No, but I will agree that this is actually something he can affect. And this is something that if you were trying to goose the economy, it's a natural way to do it. It makes a lot of sense. He's also a real estate guy, so I'm not going to push back.
Now, like literally, I woke up this the home builder index, and it's cheap. It's been already brutalized. Like not only have we had a 4 or 5 month consolidation, but the selling started back in 2024. It's been a pretty vicious kind of bear chewed up period where home builders have really been left behind. And this could be the beginning of a new breakout on this. The next story I wanted to talk about was a story that Meta signed a nuclear energy deal that decided to wake the uranium markets. While uranium itself is flat, still a uranium price, but this is the URA gapping higher on this. But you definitely are seeing, like the Cameco's gap to fresh new highs on this headline, and obviously, turnaround, like the two companies that were directly involved in the Meta story is VST, which was in a pretty vicious multi-month decline, and a pretty clear attempt to reverse on the upside. Oklo, another one that was in this play, was going through a pretty vicious decline from $190 down to 70 in a span of like 3-4 months, gap back above the 50-day. Question here, did the uranium market just get a new tailwind to get going, considering that the AI bubble has not burst, even though NVIDIA is not participating? Maybe uranium stocks still have another leg. Any thoughts?
Yeah, I do have some thoughts on this. There's been rumors out there, and as a Canadian, I hear more of the resource rumors than, let's say, the tech rumors. There's been rumors out there for a while that the Trump administration was going to do, in essence, a type of, we'll buy all of your uranium at a high artificial price to encourage more building of mines and things like that. This has been something that, guys have whispered about on Bay Street for a while. I suspect that it is true. I suspect that this is something that Trump is at least considering. He has kind of insinuated a certain amount of this before. But one of the things that happened is if you go look at the next gen, which is NXE, they tweeted out something that almost implied that it was already occurring. So there is a chance that this is occurring beneath the covers, almost like, or behind the scenes. The Trump administration's already, they're, supporting it by buying the, uranium. I don't know. I do think, though, that that's ultimately what's pushing this, as opposed to the Meta story. The Meta story is good.
Well, no, the story that just gave it the headline, buddy.
Yeah, but I don't think that was the headline. I actually think that next gen was more important.
But next gen didn't happen today.
No, it happened a couple of days ago.
No, it happened a week ago. It happened back on.
I don't know.
It happened on January 2nd or whatever. So like things were going.
The other thing I think, though, Patrick, is that everyone got up and January 1st they wanted to rebalance their portfolios, that they had owned too much Mag 7, and I think that uranium is a natural place to do well with the broadening of the markets. So I think it was a combination of factors, but it looks great. I won't disagree. Uranium looks great.
It's waking up. Okay. Two last things.
Okay.
Little off thing. REMX, the rare earths, the not so rare earths.
Right.
The if you go a weekly chart, they obviously went through a 3-year vicious bear market decline, $125 down to 30. They've woken up, obviously, with the whole geopolitical stuff. But here in the last week, broke to a higher high. Like it looks like they're ready to go. And if they do, this could be 100, 120 on the upside. Obviously, one of the stocks you've been writing about, like Alcoa, has been on fire. Like the lithium names, I'll put Albemarle on there, ripping on the upside. There's action happening in this resource space. Steel stocks, Arcelor, has been on fire. Even iron ore stocks, like literally, the only shit that's not been working has been essentially lumber and ag.
Yeah,
right. Like
and energy, until recently.
And, by the way, but look at the way Weyerhaeuser turned on the home builder news. Right, yeah. Like maybe lumber stocks are just about to wake up. Right, like maybe the story is not just home builders, but that these lumber plays are going to turn. But
I know a mutual subscriber of ours that will be so happy.
Absolutely. Oh my God. Absolutely.
Lumber guy around.
George will love it. All right. So the next thing here, the MOO index. You can see ag stocks have been quiet sideways. it looks like the ag stocks are about to break. But it's been a tale of two types of ag stocks, like Nutrien trading near its highs, had a recent pullback, but still been a pretty good chart. Archer Daniels, no, so ADM, so if I can type properly, back up to their highs, about to break out. Like, you've had these stocks doing very well, and then you had the mosaics, which got murdered to the downside, trading along their lows. But the question is like, are we going to have an ag story? And that's, John Deere's CEO came out in their last earnings thing saying 2026 ag bull market. I don't know whether to believe them, but these stocks have been cheap and they've been left behind in the commodity story. It'll be interesting to see whether they make their big turnarounds.
Got it. All right.
Literally, I could literally talk another hour, but
people would love it. But we could save something for next week.
We got to save something for next week.
Okay.
Thanks. All right, everyone.
All right, folks. Thanks for tuning in. Bull market, bear market. We're just happy for you to spend some time. And I'm screwing up the outro already. Patrick, where can they find about more of this unbelievably awesome analysis?
At bigpicturetrading.com. You can try a free trial. No credit card needed. Anyway, but as well, you can, I do more periodic video updates as well on my YouTube channel at Patrick_Ceresna, where, beyond a little bit of clickbait porn headlines, I literally do the same analysis. I know I have to do the shameless shit to try to
be fair, I blame that all on Daniel.
Oh, rightfully so.
It's like,
but you blame it on Daniel, but
to write their headlines,
but
you don't get to write your
no. I pay Daniel, so it's really my own fault.
Okay, fair enough. That is true. All right. Bull market, bear market. We're just happy to spend some time together on this crazy ride. Now stick around for the after show. All right, Patrick. Daniel, where are you there, buddy? I threw you under the bus and Patrick, pulled you out from under the tires.
Oh, it sounds like I haven't got a job, so that's me done.
Anyway, you know what? I'm going to quickly rate this beer.
Yep.
For a porter beer, I thought it was going to be a lot harder to drink. And I thought this was going to have a lot more of a pumpkin kind of tone. It didn't. But generally, I hate this type of beer. So my vote is biased to the fact that I don't think I'll ever rate a porter beer high. But it is pumpkin. I would never buy this again. Okay. I'm going to give it a 3.5.
3.5. That's a new low.
I've never seen you go under 5.
That's right. I was just gonna say it is a beer, so Patrick's like got his.
Yeah. I'm just doing it. I'm doing it. I called it
3.5. But what I love about Patrick though is he soldiers through, even though he can't stand it.
Oh no, yeah, absolutely. Oh
like
no, I'll finish. No, there was actually, what beer was it? Just we had last month that I refused to drink. There was one beer
I still think you drank it. No, you still drank it.
No, I didn't finish it. No, but even this one, I have a quarter of the can still at the bottom. If I can't finish a beer during an episode, it's bad. Like usually a good beer, I'm done in the first 15 minutes.
Yeah.
That's
sometimes not even the good beer.
I have a slur in my analysis by the time it kicks in.
For sure. For those who don't know, actually, when we started it, Patrick and I we were going to drink scotch and stuff, right? We weren't just beer, and we drank way more. And I remember my old man. I remember my old man listening to one, and he's like, phoned me up, and he says, "You were slurring your words so bad, you got to pull it back." Like he was just like, so I got a lecture from my old man about not drinking so much on the podcast.
Now he drinks the bubblies.
That's right. Now I'm a complete wimp. It was my concussion. I never got back. Like, it was literally my concussion. I stopped drinking and it's just never come back. But listen, no more excuses. I should start picking my drinking habits up. For those who don't know, though, let's bring it back to the honey badger. I really think, like, Daniel, have you seen the honey badger video?
No.
Oh,
What?
you got to go see it.
I have no idea what you guys are on about.
Your dog is like getting involved in there. He
Oh my
heard
God. Yeah, like,
the honey badger, and he's like, "Yeah, holy shit, Daniel, you haven't
oh
seen the
my
video."
God.
Even he has
Danny.
seen it.
We should just me and you should talk while he's watching it.
I don't
so
think
that
we
watch
can
it.
though, because I think that we'll get YouTube will get mad at us. They'll be
No. He could just watch it on his own. I just want to watch his facial
Nah,
reaction.
it's gonna be boring. Like, but anyways, but it will be. Everyone, go watch it. It is absolutely unbelievable. Let's see how many. Let me just go find it. What is it? Randall? Is that the guy's name? Randall. Let's see here. Don't want to hear you, Ian Bremner. Randall Honey Badger. Okay, let's see, because it's got some obscene amount of 106 million views.
Oh wow.
106.
14 years ago.
Nasty ass honey badger. Original narration by Randall. Go watch.
I have to say that's just a little bit more than what Patrick's videos normally get. So kudos to him.
All right. Anything else you guys want to talk about, or should call it a day?
Oh no! Did you have a happy New Year? Good holidays?
It was good. It got cold here. It was brutally cold. I know that's something you don't know anything about. Hey, did you do your 12 pubs of Christmas?
No, I did not. Sadly, well, actually, no, I did. I went on a huge road trip across Europe.
You did your own 12 pubs of Christmas.
Yeah. No. I had a good buddy that's in the same circle of friends that moved to Barcelona. And Barcelona was my first stop for an overnight thing. And it literally was the Friday of the 12 pubs of Christmas on the 19th. And so we went, just the two of us, and we did some beers, and we sent them videos to the boys wishing them luck on their 12 pub journey.
Oh, so the 12 pub was still going without you.
Yeah, they still ran 100%. Oh yeah, no, it's a cult thing now over there. Like they've got 30-40 people that come out religiously every year, with or without me. But I was one of the original guys that came up with it. But I don't. Obviously now I'm in Europe.
Yeah.
But
you should make a new one.
But anyway, I did do it. I did do it in Barcelona. Great video of me chugging a beer for the video to the boys.
Is that what we can find on your YouTube channel?
No, absolutely not. This is. Just on Instagram. But I did 6,000 kilometers in 17 days.
Really?
On the trip. I went all the way to the Amalfi Coast in Italy. And I did some skiing in Limone, Italy. Yeah. I did Rome New Year's. Went all the way back to San Sebastian, spent some time in France and Carcassonne and all these other places. So I did quite the little journey. My ass is still hurting from sitting in the car that much.
Pardon? And so while Daniel and I were slaving away making the extended long version of the market,
I was
gallivanting around Europe in your fancy car doing stuff. Is that right?
Absolutely. That's exactly what happened.
At least own it.
By the way, great job, guys, on that New Year's special. I laughed my ass off on the Danny.
You didn't watch it. Don't lie.
I did. Well, what do you mean? I was in the freaking car for two weeks. I sat there. I needed to entertain myself somehow. I went back to episodes from 5 years ago just to see.
Okay, well, on that note, everyone, good to be back. We'll see you a little bit later. Take care.
All right. Cheers, everyone. Happy New Year.